On this vote, the yeas are 218, the nays are 214. The motion is adopted.
Hello, thank you for joining us. This is John Sluice with Entrust CPA. We're here to talk about everyone's favorite topic, taxes, but specifically related to the one big, beautiful bill. Now, I know all of you love talking taxes as much as I do, and you would be riveted for the next hour and a half as I talk through all the next taxes. Not really, right? I know better than that. But to be fair, if you were to let me go through all of the tax changes and the tax implications that are fit inside of the one big, beautiful bill, it would take just that, an hour and a half to go through. Don't worry, I'm not going to take that amount of time. But what we are going to do is provide a series here in the following weeks to come that are going to dive into many of these different topics that I'm going to go through and highlight today, but go in more depth. And that way you can listen to the ones that might specifically relate to you, but you don't have to hear about all of them. But what you do need to hear today is that it will impact you in 2025. Now, it's not very often that your accountant will use the words will with the certainty that I just did. But under this case, I can tell you this will impact you. And for most of you, it will impact you in the good way. So in the tax deduction way or decrease of tax implications way. Some of you will be increases, I'm not going to lie, but most will actually see a savings in taxes. Some will be direct, some will be indirect, but it will impact you. What you need to hear from me today is you should be scheduling a call with us to do tax planning, how it specifically will relate to you. If you don't give us a call, we're going to be giving you a call to try to schedule something here in the next month or two or three. Now, nothing here in this bill is an emergency that you have to jump out and take care of immediately, but it is something you need to be thinking about, and particularly how it's going to impact your 2025 taxes. And so I do think it's good to get on the docket to a time for us to talk. So give Lori a call at the front desk. We can get something scheduled for you to come in and we can go how it's going to specifically relate to you in your circumstances. Now, to give an overview, I'm going to spend the next little bit going through each one of the little items at a high level. The first item I want to hit on is just the most fundamental and basic thing, which is the tax rate solidification. So if anything, this probably has the most impact for everybody, is the highest cost within the bill, and really has the most wah-wah impact right now. And what I say by that is in 2018, the tax law was added and changed on a temporary basis to lower the individual tax brackets that each person pays in the United States for income taxes. Though it was done on a temporary basis, which was set to sunset in 2025. Had this law not been enacted, everyone's taxes would have increased, or almost everyone's taxes would have increased. But because they passed this bill, it made permanent the decreased rates that we're feeling. Now, we all know how permanent something is when it comes to government, right? But at least it's in place now and there's not going to be a sunset. So the biggest thing you need to hear is the tax rates are going to stay low for the next little while coming to it. But in law, it's technically permanent. We're going to go into detail into that in a future video. Number 2 is the no tax on overtime and tips. Haven't quite figured out how they're going to roll this out yet, and there's lots of nuances within it, but the general theory is if you get overtime, paid overtime, or if you get paid tips, yes, it will be tax-free for you, income tax-free. Will still be subject to Social Security, and so there's still implications on it, but you will see a decrease in taxes because if you have overtime or tips, you are now not going to pay income taxes on that. We have to see how it's going to roll its way through, but that's to come. Where you need to be thinking about that, if you're a business owner, you're likely going to need to track those separately. You can even think about using those for your advantage now as we look at it, but that has a big implication. So you should be thinking about that and looking at how does it in play for you. Now, that doesn't mean that you're all going to roll out and start saying that I have a bunch of tips, right? Let's joke. Your tax return isn't going to now become all voluntary tips so I can avoid taxes. Don't hear that. They're going to have mechanisms in place that it's going to limit it to very specific businesses. But if you do normally get tips, it's probably going to apply to you. Number 3, taxes on Social Security. It was one of Trump's big promises during the election period is he was going to make it tax-free for Social Security. Well, folks, Social Security is not tax-free. They couldn't change it. The laws that as it relates to the Social Security Trust would not allow them to amend and change that. What they did add was a $6,000 exemption for seniors over 65. But this, like many of the items in this bill, are kind of a promise and a give and then a pullback. Because you get this, but you don't get this. So it phases out at a really low income threshold. And so know that it's there. It's meant to say, hey, if you get Social Security, you're still going to be taxed on Social Security, but we're going to give you an increased credit to offset it. So it's kind of a way to say it's tax-free, but not really tax-free. But then if you do other things like a Roth conversion or have income, it's going to phase it out. So you need to be thinking, if you are over 65 and thinking that Social Security might be tax-free, you might have the net impact of it being tax-free, but it's not really tax-free. But you may not as well, because you might phase out too. So just know that that may apply to you, and one of the reasons you should give us a call and we can get it scheduled for your specific reason. 4, SALT cap. That sounds exciting, right? Well, SALT stands for State and Local Tax Deduction. So that's where in 2018, when they lowered the taxes, they simplified them. Well, part of simplifying it was limiting certain things, and that was hard for many of the states that had high income tax rates. Well, they've increased this now, so this deduction can now go from $10,000 to $40,000. But just like the other phase outs, there's a phase out for this one too. So it's great news. We're going to take it, but we're not going to get too excited because the likelihood that it's actually going to apply is not as big as we thought it would be. So it's something that you should think about. You should know that your state tax is now, the deduction if you do itemize went from $10,000 to $40,000. But at the same time, we don't want to get too excited either. In 2018, they did a great job of simplifying the tax system. Simplifying, and I'm putting that in quotes. I got often asked, well, are you afraid that that's going to cause you job security? I'm like, nope, not at all. I want most Americans to be able to go out there and file their own tax return on their own. And I'm okay with that, because if you have a 1 W-2 and you get the standard deduction, fantastic. You don't need our services, it's okay. We're going to help you do the tax planning, the strategy, and otherwise when it gets more sophisticated and more complicated. And that was one of the nice things about that 2018 tax law, is it simplified it for many Americans. Well, in the normal course of that, part of the simplification means they took some of the things away, right? Well, that doesn't seem fair. What you gave us this, but you took that. You gave us this and you took that. Well, that's part of the simplification, right? Well, the challenge under the OBBB now is that they're giving you some of these things, but it's now making it at the cost of simplification. So they've given you the benefit that now you can deduct up to $10,000 worth of interest on auto loans. Caveat, it has to be assembled in the United States. And caveat, if you have $10,000 of auto loans, it really works backwards to about $150,000 worth of auto loans. So we should have a discussion on that in general. But that deduction is still there. Now, that's not an itemized deduction, but it's a deduction. So you're now getting this quagmire of, is it itemized, is it not itemized, is it halfway itemized, is it partly there? The same thing can be said about they've given a charitable contribution deduction. That used to be in the itemized. Well, they increased the cap, and so no one was doing charitable contributions anymore because they increased the standard deduction, so now more people took the standard deduction. But they saw a decrease in charitable donations. So they have now added that back into another spot on the tax return. So it's not itemized, but it is itemized. So what do you need to hear from that? There are now more deductions that you're going to be able to, but guess what? All those things that I didn't have to ask you about before, now I'm going to have to ask you about them again. So your return's going to become more complicated again this year, which again is not a bad thing because it means more deductions for you, but it means more things that you're going to have to keep receipts for and start thinking through for the year end of what you need to have in preparation for your year-end taxes. Perhaps one of the ones that I'm most excited about is the permanent increase in the estate tax threshold. Most of what you hear me talking about is income tax, not the estate tax. The estate tax is one that you pay when you pass away. It's the tax on your wealth at that point. They, for a long time, had put it at an increased amount before you even have to worry about that. That was subjected to potentially go down. It has now been solidifying into just north of $15 million and adjusted for inflation. So for most of you, $15 million is going to be far more than what you're thinking about, so you don't have to worry about that, and it's something you don't even have to think through. For those of you that are at that spot, we can talk, we can work through those, and you need to be thinking about it. But one of the benefits is it's now solidified in, so we can now know how we want to act and what we want to do to put in place. And it's not this temporary thing that it has been for several years. For those of you that are business owners, QBI, or Qualified Business Income Deduction, is a huge deduction that is continuing on. You've heard me talk about that. Actually had one of the biggest impacts of increasing taxes if they didn't continue it on. And I hoped that they would continue this on and extend it and make it permanent, and is what they did. So again, this kind of fits into the want section because it's nothing new from what you've been doing, but it still remains a 20% deduction. They had talked about increasing that, but that is there for business owners that you should be aware of and continue to use. Now I'm going to move to some more of the specialty ones, if for lack of a better word, that are there, that aren't going to apply to everyone or have as broad of reaching, but are still impactful. Probably one of the only ones in here that you need to be thinking about immediately, or at least asking the question, and is probably the most new and different thing, is the credit for, I'll say, private schools, right? It's a credit for charitable giving organizations, but it's a workaround for you to get a direct credit potentially for sending your children to private schools. So if you have kids that are going to private school in elementary or high school level, you should be asking your school what they're doing to account for this. It's not something you get on your tax return. Well, you do, you get the credit on your tax return, but it has to have gone because you went through the school. And so they're gonna have to act pretty quickly to get that in place, to get that process and that consideration in working for this coming tax year. So what you need to hear from me is, if you have kids in private school, ask the question of your school, what are they doing to have this in place by the end of the year? Trump accounts. For a period, they're called mega accounts. But those are the ones that they're going to essentially give every child $1,000. Anyone that's below the age of 18 are going to give them $1,000 into these accounts that are going to be used to be saving for other things. Think school or new house or otherwise. Now, this is an entirely new concept, something that got thrown in. I don't want to say got thrown in there at the last minute, but it is something totally new that I'm not even prepared here yet to tell you all the details within that, but what you need to know is that they are there, it is in law, and that we're going to be seeing how that rolls out in the coming months. So that's there. Now for businesses out there, you're going to hear a lot of talk about the increased accelerated depreciation. It's there. I don't want to downplay that. Quite frankly, it was there already, just in a smaller amount, and for most people, at least that we work with, aren't even at that limit where they were hitting the limit in general. I think the limit before was a couple million or $1 million or so. So most individuals weren't putting that much in place. And so it's there, it's extended, you should know. I don't want to downplay it. And if you're a business owner, we're going to talk about that potential, but it's not this great grandiose thing that you're probably seeing in the media that says, go buy this now, get this because of the accelerated depreciation. It was there before, just a little bit more, just changed. But that's good news for you. I don't want to downplay it, but at the same time, it's not going to be that great compared to what you have had in the past. Now for some fun ones. If you're a commuter on the bike, there's some tax law in place that you can now get a little bit of a credit for that, as well as if you happen to have a spaceport, I'm calling this the Elon Musk carve out, there's some new tax incentives there as well. So we had to have them get paid back somehow, right? Was that too political?
No.
Okay. Was that okay in how I worded that?
Yeah, I think that's okay.
Yeah, okay. Well, if you made it this far in the video, congratulations and kudos for you. It's probably further than most will make. But what you're seeing here is, even in my summary video, it took a lot to just even walk through just a few of the items. There are many more in there. There are many more caveats and nuances and phase outs and phase ins that are all going to apply. What you need to hear is this is going to impact 100% of you out there. It will impact you. Some of you less than others, and I'm not saying that you immediately have to go out and do immediate different things, but you need to be aware that it's going to change, it's going to look through, it's going to help you, likely help you, but it's going to impact you. So schedule a meeting with us, look for the future videos that we're going to go into detail in each one of these where you can understand them and how they impact you. But then specifically, we look forward to being able to talk to you as they relate to you specifically in the coming months. Thanks for joining and look forward to talking soon.